Have you ever wondered about the intricate dance of buying and selling stocks? At its core, the stock market embodies the exchange of ownership in companies, where investors engage in a constant cycle of trade. Each transaction not only reflects a monetary exchange, but also signifies a moment where an individual becomes a part owner of a business, albeit in a small capacity. This ownership is encapsulated in the stocks that represent shares of the company. The journey often begins with a company's decision to raise funds without the burden of loans. Instead, they opt to sell shares through an initial public offering, IPO, a formal entry into the public eye. This pivotal moment not only changes the company's trajectory, but also invites investors to speculate on its future growth and value. Once listed, these shares take on a life of their own on renowned exchanges, such as the New York Stock Exchange or NASDAQ, where the heartbeat of trading quickens. The price of stocks is a vivid reflection of market forces, driven by the timeless principles of supply and demand. When enthusiasm swells and many are eager to buy, prices ascend. Conversely, when sellers outnumber buyers, prices tumble. However, this ebb and flow are influenced by a myriad of elements, including corporate earnings reports, macroeconomic indicators, and shifts in investor sentiment. Positive news acts as a catalyst, uplifting stock values, while negative developments can incite a plunge. This delicate balance keeps traders on their toes, navigating the landscape of potential profits or losses. Investors typically profit in two ways: capital gains and dividends. The former emerges when stocks are sold for more than their purchase price, while dividends represent direct payments made by companies to their shareholders as a token of appreciation for their investment. This creates a dual avenue for wealth accumulation, appealing to varied investment strategies. Additionally, the market houses a spectrum of investors, from day traders capitalizing on short-term fluctuations to long-term holders focused on enduring growth. By observing major indices like the S&P 500, one can gauge market performance trends, deciphering whether the economic atmosphere is burgeoning or faltering. Yet, with opportunity comes risk. The stock market's unpredictability can lead to financial pitfalls. Successful investing hinges upon a strong grasp of market mechanics, remaining educated, and pursuing a diversified portfolio strategy, steering clear of the temptation for hastily made profits. The stock market serves as a vital conduit that connects capital-seeking companies with those aiming to grow their investments, illustrating the intricate weave of financial adventure.